Assalamualaikum. My name is Nabila Huda binti Syekh Anwar. I would like to introduce my group member, which is Shanggara anak lelaki Subramaniam, Nur Najwa Afrika binti Razmi, Dina Maisara binti Sulaiman, and Leslie Elisha Joy anak Marcus Medan. We will present about capital structure of RHB Bank. We choose RHB Bank for our analysis. Introduction of company. RHB Banking Group is a fully integrated financial services in Malaysia. The group's core business are structured into 5 business pillars, namely Group Community Banking, Group Wholesale Banking, Group Syariah Business, Group International Business, and Group Insurance. RHB Banking Group is a multinational regional financial services provider that is committed to delivering complete solutions to customers through a differentiated segment offering an ecosystem that supports simple, fast, and seamless customer experience, underpinned by cohesive and inspired workforce and relationship with stakeholders. It also ranks among the top bank in Malaysia and with a significant presence in Asia. RHB also has strong market leadership in Malaysia across targeted product and segments.
Capital structure analysis is the process of evaluating and assessing a company's combination of debt and equity financing, as well as its overall financing strategy. To analyze the capital structure of RHB Bank, we use 3 ratios: debt to equity ratio, debt ratio, and equity ratio. For debt to equity ratio and debt ratio, a higher ratio indicates a higher level of debt and financial risk, and lower ratio indicates a more conservative capital structure. Equity ratio, a higher equity ratio indicates lower financial risk and greater financial flexibility, while a lower ratio indicates higher leverage. The table shows 3 ratio calculation for RHB Bank. The debt to equity ratio shows an increasing trend from 2020, which is 9.02 to 9.33 in 2021, and it is increased to 9.81 in 2022. The debt ratio is remained the same in 2020 and 2021, which is 90%, and it's increased to 91% in 2022. While the equity ratio also remained the same in 2020 and 21, which is 10% and decreased to the 9% in 2022. A good debt to equity ratio is around 1 to 1.5. According to the graph, RHB Bank has a high debt level every year. The level increased from 2020 9.02 to 9.33 in 2021 and up to 9.81 in 2022. The situation is due to them borrowing capital to give loan to customers. Based on the graph, we can see that RHB Bank has more debt in 2022 compared to the other years.
Okay, Assalamualaikum warahmatullahi wabarakatuh, and my name is Analyse binti Razmi, and I will continue to present about earning per share. Earning per share is a profitability ratio and a financial metric that calculate the portion of a company's profit attributed to each outstanding share of common stock. It is derived by dividing the company's net income or profit by the total number of outstanding share of every period of year needed to compare the performance of the bank. EPS is a key indicator of a company's profitability on a per share basis and is often used by the investor to assess a company's financial performance and compare it with other companies in the market. Highest EPS is typically viewed as a positive sign for investor, and the EPS ratio can identify an investor looking for reliable sources of income and how much space a firm has to raise its current dividend. Even while EPS is highly significant and vital tool for investor, it shouldn't be viewed in a state of nothing. To make a better indicator, educate and a responsible investment decision, a company EPS should constantly be compared to other firms. One of 2 ways to categorize outstanding share: diluted EPS or fully diluted earning per share is also an alternative technique. I will continue to the next slide. Based on this slide, we can see the calculation of EPS for every year to make a comparison. The formula for EPS is earning per share equal to net profit divided by a weighted average common share. Then the calculation show that for the year 2020 is 50.8 cents, for the year 2021 is 64.7, and for the year of 2022 is maintained about 24.7 cents. I will continue to the next slide. Based on the graph, earning per share of RHB Bank is increased across the year from 2020 to 2022. In 2020, RHB of Bank EPS was 51 cents, indicate that each outstanding share, the company earned approximately the amount in the net income. In 2021, the EPS increased to 65 cents, suggesting the improved profitability on a per share basis compared to the previous year. Interestingly, in 2022, the EPS remained the same at 65 cents, suggesting a consistent level of per share earning. The information reflects how RHB Bank's profitability as measured by EPS increased from 2020 to 2021 and then remain stable in 2022. Investors often analyze EPS trend to assess a company financial performance and potential for return. It shows that EPS or RHB Bank as a positive sign for investor and demonstrate sustain and improve financial performance when the value of EPS keep increasing and maintain their earnings per share within the year 2020 to 2022.
Return on equity, which is ROE, which measures a company profitability and efficiency in utilizing shareholders' equity, is a key factor in capital structure policy. A higher ROE generally indicates better financial performance and effective use of equity capital. ROE provides insight into how well a company generates profits from its shareholders' investment. We calculate ROE by dividing the net income and the total equity and expressed as a percentage. So this is the calculation of ROE for the year 2020, 2021 and 2022 for RHB Bank. Based on the graph, the return on equity of RHB Bank shows a positive trend, increasing from 7.51% in 2020 to 9.34% in 2021 and further to 9.42% in 2022. This suggests a consistent improvement in profitability and efficient utilization of shareholders' equity over the years. In 2020, the 7.51% ROE suggests moderate profitability, but it is essential to compare with industry average for context. The increase to 9.34% in 2021 indicates improved profitability, possible due to enhanced operational efficiency or increased net income. The slight increase to 9.42% in 2022 shows the consistent positive performance where the bank is able to generate higher returns relative to equity.
The term dividend policy refers to the guidelines that become an indicator to the company on how much dividend to give to its shareholder. Dividend policy specifies how the company intends to distribute dividend derived from the company profit. Hence, the business has the option of distributing a portion of the profit as a dividend to shareholder or keeping it as an earning in their financial statement at the end of the year, which means the profit will be used for the purpose of reinvesting in the company capitals. Not only that, the company also can decide whether to distribute the dividend monthly, quarterly, or annually. As for the shareholder, they are also given option on how they want to receive the dividend, which is whether in cash or in terms of stock dividend, which is the company offer additional share to the shareholder. Based on the graph above, we can see that the dividend paid by the company is increasing from 2020 to 2021, and it shows a consistent and static movement from 2021 to 2022 as it maintains the dividend paid for both years. In 2020, the final dividend for RHB banks are 7.65 cents per share, amounting to 3.06 million. That is decreased from the interim dividend, which is 10 cents per share. This final dividend of 7.65 cents per share received approval from the Board of Directors on 27 January 2021. In 2021, the interim dividend recorded the amount of 50 cents per share. However, it changed and increased to 25 cents during the final dividend. It shows that the dividend paid by RHB Bank is 25 cents per share, amounting to 1,035 million. This dividend paid consists of the cash portion of 15 cents per share that is distributed to the shareholder, and a total of 10 cents per share is an electable portion that is needed for the approval of the shareholder. This dividend is paid on 16 June 2020. In 2020, the first interim dividend is 15 cents per share, which amounting to 631 million. However, during the second interim, or known as the final dividend, it is increased to 25 cents per share, amounting to 1,061 million. This final dividend consists of the portion of cash 20 cents per share and electable portion of 5 cents that has been declared and approved by the Board of Directors on 21st January 2023. Based on all this data and analysis, we can see that the dividend of RHB banks are increasing from year to year and being consistent for 2 consecutive years. Seeing how well the financial situation and profit generated by the RHB banks over the year, it is expected that the dividend payout will be high. Hence, this higher dividend indicates that the RHB banks are in a healthy state of financial condition and shows the potential to expand and grow its company. This will give an assurance to the shareholder to trust the company. Through the report of RHB Bank, it is clearly stated that the RHB banks are giving an option for shareholder whether to receive the dividend in cash or use it for reinvestment purpose. In conclusion, RHB Bank has demonstrated positive trends in earnings, return on equity and dividend payouts, reflecting a general healthy financial condition. However, the increasing debt level highlighted by the debt-to-equity ratio warrant carefully monitoring to ensure the sustainability of the bank's financial stability. Stakeholders should consider this factor in their assessment of RHB Bank overall performance and investment potential. Overall, RHB Bank made a good capital structure and give positive impact to the company because the ratio is above the minimum value. That's all for our group. Thank you.